Okay, welcome back. Let's get into the stock market technical analysis. I'm going to go through what I'm seeing in the charts today, guys, and really point out, anything that really is standing out that's changed. So real quick, if you are a member, I will be doing a live stream tomorrow morning around 9:15 for the members only. In that, we go through chart picks you want me to look at, any kind of stock analysis you want me to look at, go through that for about an hour. So if you're not a member, go ahead and join up. Just go ahead and hit that join button next to the subscribe button, or if you look in the description below, there should be a link on joining the membership as well. So it's $5 a month. It should be pretty affordable. And I'm constantly pointing out new trade ideas for the members. So, and then guys, if you're interested as I'm going along to learn really more in depth about what I'm talking about and how I put these trade setups together, take my stock market technical analysis course. That's about 4 hours or so of broken down concepts that I use in trading and trade setup. So link in the description below on that. Check that out if you're interested. Moving on, guys. Triple Qs. All right, so one thing is we're just kind of grinding around a little bit. We're still right here in this resistance area. Again, here's your downtrend, resistance, and look, we're not breaking out, but we're not really breaking down. We're just kind of testing this as resistance, and I could be slightly off even on my chart. I don't know. If I roll down to the hourly, I'm about there. But look, as I zoom in on the hourly, you can see we're just breaking down, kind of grinding up. As of right now, someone left a comment that said it seems like a buy the dip market, and for sure, price action definitely, we are in an uptrend. In the short term, if I look at the hourly chart, each one of these dips has been bought, and that continues, and that's because we're in an uptrend. But here's the thing: the negative divergence signals to me that buy the dip trend is losing momentum, it's losing steam. So even though price continues to kind of move up, it's with less and less participation, and we're losing steam. So do you want to hold out for a buy the dip market? What I'd want to see is these divergences taken out. That would tell me that there's more and more participation being added to the trend, and you're early on the trend. This is late trend, okay? So if you're holding out for longs, or if you haven't been long and now you want to get long and you're chasing the price action, the divergences are telling me that you're late to the party, you're late to the trend. So again, the way I trade is I'm early to the party. Oftentimes I'm early for the next trend. And so the party can go on a little bit, typically does go on for a little bit after we get a trend. But in general, I'm interested in being positioned for the next trend. Okay, so that's what we're trying to do. Trying to catch the next swing trade. Not, and again, when I point out trades, I'm never right the day I point it out. Sometimes I am if it's certain trades, but don't expect to just be instantly profitable on a trade when we're looking for a reversal or catch the next trend. I don't see any indication to tell me to not to get out of my shorts. Now again, I did point out we could trade up to this 200-day simple moving average. That's completely possible. I see that as potential upside right up there. But I think we probably get a reaction here first. So maybe if we're going to trade up there, and we could even go beyond that up to about 350, this red trend line here that I have extended out. That's the big trend line that I have marked out. But somewhere right in there would probably be the final target. But I don't think we're going to just shoot straight up there. All right, to me that seems a little too easy. I think we'll probably get a pullback here, or at least some sort of a reaction at this trend line that I have marked out. So I'm looking for that. And the reason why I think we're going to get that, going back to the hourly, we're building negative divergence. So any little new high that we make is a divergent high. And today, if they want to pop it up and make a little new high, I think it's going to fail when we make that new high. So again, I'm just looking for that. I'm looking for a move down to my target right now, about 296, and trying to catch this trade right here. From where we're at now, it's a drop of about 9.5% or so, and that's kind of the trade. That's, to me, looks like more of the opportunity there to catch that big trade. So nothing's really changed in the small caps. You can see today they're just rallying it back into the 200-day. We're just testing the 200-day. I don't think we go much beyond this. Okay, so even though the price action today is up, again, you got to give it a little wiggle room because, you know, and maybe they pop this just slightly, run it above it, and then fail. But I think we fail if we pop above it, all right? So I just don't see too much more upside. We're not breaking out above the 200. We're rallying into resistance. So that's it. I think we head lower from here and, you know, get at least a check in this rally. LLY, this is a trade idea I pointed out here. Again, I still think we're continuing this bear flag pattern. Yesterday looked like it was going to break down, but it wasn't that impulsive. And again, I always talk about that, and I teach that in my course. Breakdowns and breakouts, what you want to look for is impulsive price action to help verify that. So if you just kind of drift below a level or kind of drift above a level and it's not that impulsive, we don't take those moves, okay? So we need to see impulsive price action when we're looking around a key level. So again, on the daily chart, I just got this bear flag. We're just defining the bear flag. That's it, just bouncing within there. So there's your flagpole, there's your flag. When we get that continuation, or if we get it, it should be impulsive, and that sets us up for a move, I believe, down to about the 200-day moving average. Nothing's changed there. I'm adding to my short position a little bit today. If I go to the hourly, you can see we're just kind of bouncing into this resistance area of this flag. A little more aggressive to add here, but still it's there. So resistance, you can see we've had all these reactions at resistance. So I'm adding there. I'm looking for it to head down to the bottom of the flag and then ultimately break to the bottom, break to the downside and continue down to that target. So I'm sticking with the trade. Nothing's changed there. Here's a nice trade setup. Lennar, L-E-N, okay? So this one is, it's coming into big resistance, very big resistance. Can go a little bit higher, but again, we're in that zone of resistance where it's going to get choppy. When you get into these zones of resistance, it's kind of choppy, and you move up, you move down, you move up. But ultimately, that's just the chop. It signals that we're going to reverse trend oftentimes. So on this one, look, big support right here at about 91.25. Support, big breakout candle there. Kind of held it through here, and then it was resistance, and sure enough, coming into that level and the 200-day, so dual resistance basically. Now, yeah, you can go a little bit overhead, 91.08, and I think we'll probably run up and tag that, pop the 200-day, tag that level, and I'd call it good. So, but big zone of resistance. So, you know, you could. You know, in my perspective, it doesn't make sense to wait for the very last penny and get it. You might not get that. You might not get that move. You might just wake up and this thing gaps down. So rather than try to grab the very last penny, just be willing to ride out a little bit of move against you. At least that's how I treat it. The other thing is you look at the daily chart where we've got some negative divergence showing up here on the daily. Just starting to build, just showing up right there. See there on the daily? And it's right there on the PPO. If I go down to the hourly, you can see that's clear divergence. You know, it's been there on the hourly for long enough that it's now showing up on the daily. So one thing you could do is you obviously could step in here. I've kind of pointed out where big resistance is. It's just overhead. You know, we're talking about 4% up. And then, you know, quite a lot to the downside. Or if you want to, draw your trend line out and wait for a break of the trend. Okay, that's the more conservative way. We just wait for the breakdown of this trend, and that would be our sell signal. Okay, so that's what I see on that one. Targets on this one, obviously you're probably going to get a reaction right here, right in there at about, that would probably be my first target at 81.25-ish. And, you know, from where we're at now, that's a drop of about 7%. So not a really good risk-reward ratio for that first target yet. So, you know, either you could short it up here and you'd have a much better risk-reward ratio down to that first target. Or if you're going to wait for the breakdown, you're probably going to want to wait. You're probably going to want to aim for another target. And it looks like we got one right about here. Right in there at... And that puts us at about $75. So that, from where we're at now, is a drop of about 15%, 14.5. That would be my target on that one. I'm not taking the trade yet, but I would probably be interested up here or on the breakdown. Right where we're at, it's not that interesting. So I'd want to short it up here, or if we get the breakdown. And there's the targets. LEN is the trade idea. Tesla, nothing's changed. We are just chopping around. So again, if you look at the hourly chart, look at that. It's just chop, basically. Down, up, down, up. And I don't see any technical change here to tell me to change my position. Again, looking at the hourly, negative divergence on the hourly. We had this trend line to watch. Breaking down, back test. We actually back tested twice right here. There's your breakdown and back tested once and twice. Just drifting sideways. So I suspect what's going on is they're going to just continue to drift the market, kind of drift it higher a little bit into the close, or just kind of leave the week feeling relatively bullish. Nobody will exit their positions, and then next week maybe we get a gap down or some sort of impulsive move down to here. So back to Qs again. I'm looking for a rejection right in here. I'm open to the fact that they could continue higher up to that 200-day moving average. But I'm looking for that rejection down to here, and then maybe bounce, and then probably bounce back up, and then maybe we'll break out of that and run and hit the 200 for the final test. Maybe not, I don't know. And that's, again, I'd rather be short in a bear trend at this resistance point in case they drop down to here, hit this, maybe they make it look, and then it breaks, and then down we go. So I don't know, but risk reward is better to be short right here than long, even though obviously there's still a little momentum in the trade. That momentum's drying up, and it's clearly obvious in the negative divergences that exist. So that tells me we're likely going to pull back. So don't a lot of people, they're bullish. Again, retail, I see it in the comments. You're bullish when the price action is up, and you're bearish when it's down. But again, to make money in the market, we need to think about what's coming next. And what I can see is, you can day trade and maybe catch some momentum. But the big swing trading moves, we have to anticipate what's coming next. So looks like more downside, guys. Keep an eye on Newmont Mining, NEM. What I like about it, and I'm not long this one right now, at least not in my active trading account. I do have a longer term account that I think I own some of this. But the thing is that you've got bullish divergence on the hourly, pretty clean and cleared bullish divergence, very similar to what Netflix looked like after it kind of got washed out. So I'll show you guys that. But bullish divergence has been building, and this thing's just been basing. It's just kind of stuck in this range here. So you get a breakout, and it's likely going to be the real deal, and you're probably going to have a pretty sizable move. Gap fill up here around 51 it would be probably the first target. But again, it looks like it's been sold out, and it's just kind of being accumulated over time. No breakouts, though. No real buy signals, so I'm just going to keep an eye on it. I'm not super interested quite yet. Need to see some sort of catalyst or a breakout. But if I go to Netflix, it's very similar to what that looked like. So on Netflix, you can see back here, if I can grab it, we were building this bullish divergence for a while, actually. But building it, kept kind of just basing out. And then finally, you got the breakout. And from the breakout, it ran, if you took it at the end of the day on the breakout, it ran up 30%. So decent trade on that one, and that's kind of what Newmont looks like to me. So I'm not buying it yet till I get that breakout, but I will keep an eye on it. Lyft sure does look like it's bull flagging to me. We did have a breakout on Lyft right here back on August 2nd. Let me grab the right tool. August 2nd there, all right? And that breakout came with bullish divergence. Okay, see it right there. So again, this stuff works. If you're interested in learning this as a skill set, take my course, link in the description below. Now, what we got going on now, it really does look like it's bull flagging, and I guess I'd have to side that way. So here's the flag, and then you got your flag pole. It basically is projecting us up to that final target, about $30, and the 200-day. So, there might be another leg higher for this Lyft stock. What I'd probably wait for is you need to see the break of this this pennant, or yeah, it's kind of a pennant. We need to see a breakout to signal the continuation of this before it hits its target. So, if we get that though, probably another 50% or so to the upside. So yeah, I don't know. Lots of potential. I'm not long it right now, and it's already come off the lows. It's already come off 80%. So that would definitely be the final move if you're going to get it up there. I wouldn't look for much beyond that in terms of a rally, but we'll see. Semiconductors, SOXX. Nothing's really changed here, guys. So we're just right into resistance, kind of almost dual resistance, basically. Look, here's the hourly chart. Negative divergence on the hourly, bearish rising wedge. We had a sell signal and a back test, and today they're buying it again, but just back testing pretty much. If you look at the daily chart, this is your downtrend line, kind of your major downtrend. So you've got resistance, and we're at resistance again. So nothing's changed. Now, yeah, they could pop it. We could pop it and hit the 200. That's possible, but I don't see that today. All I see is right in resistance. And you want to short into resistance, just like you want to buy into support. So as bullish as everything feels because you're rallying it today, doesn't mean that you're going to continue to rally. And in fact, very likelihood says that this is near the highs, if not the highs exactly, and we should roll over and fail. So that's all I see. Minimum target on a pullback on this would probably be something like down to here, probably about 378.70. And that would be from where we're at now, about 9-10%. So that's what I got on that one. And I'm going to go ahead and wrap it up here. If I didn't mention it, it's not that interesting today, or nothing's changed. So wrap it up here, guys. Live stream tomorrow. If you're a member, if you're not a member, think about joining up. And if you haven't taken the course, check that out. That should benefit you as well. Link in the description for both the membership and the course. Catch you guys on the next one. Bye.